Hello and welcome to Crypto Bible. My name's Oliver Tompkins, and in today's episode, we're going to continue our series of how to look at a chart. More specifically, today, we're going to be looking at a Fibonacci tool. Now, I've got my main man, Elliott on, who's going to be talking us all about that. But before we get stuck into this week's episode, throw me an early like. We deserve it. Come on. Comment down below what other things you want to learn on how to look at a chart. If there's anything in particular, let us know about it. And don't forget, hit subscribe and turn on the notification bell icon if you love everything crypto and you want to learn about how-to videos, because that's what we kind of do here. Right, without further ado, let's welcome on our Elliott. Oh, and then he called him something else. Let's go. Here he is. Look at him, looking all cool in his glasses. Peace. How's it going, man? You good?
I'm good. I'm back in the trenches. I've not had a haircut for 6 weeks.
So when you say trenches, just in case anyone follows you and stuff and they watch you on this video, what it means, like a basement, right?
Yeah. So when I'm deep in the bunker as such, or deep in focus, I have a little bit under my house that I come down to. I've analysed the markets or do whatever, something that requires intense focus. So I'm spending a lot of time here recently. I usually limit myself to two days a week.
Yeah.
But I think I said it before. If I spend too much time in here, I turn into Gollum, you know.
Yeah, I see. I can see you growing a bit of a beard there, and I bet it messes with your mind. You start hallucinating, like, because there's no windows and stuff now.
Hopefully, hopefully, yeah.
Okay, so we're going to be looking at the Fibonacci tool today, right?
Absolutely, yeah, absolutely. So what I'm going to do, guys, am I okay to share the screen, Ollie?
Yeah, let's do it, mate. Hit share.
Fantastic. That's okay. So people really overcomplicate the Fibonacci tool. It does sound like it does sound like something that people kind of overcomplicate in that respect. And the reason why I say that is because it sounds like something that's really, really hard to understand. All Fibonacci is a sequence of numbers. It's a string of numbers. Now, I don't need to go into essentially why it's that way, but these levels are determined by these numbers. These numbers mean significance in the market because the market's driven by emotions, right? So if there's people looking at certain areas, i.e. Fibonacci areas, because these numbers date back to literal like millennials ago, right, in that respect. So if there's a congregated amount of buy or sell pressure at some point, according to certain numbers or levels, that's strictly driven by the market in that respect and the fear and emotion in this market. And kind of if everyone's running to do the same thing, then the market's going to react in that respect. And that's why these Fibonacci levels have any kind of significance. Now,
okay.
To give everyone an idea of,
sorry, have you got it up on your screen? It hasn't popped up yet. I know you did say.
Oh, okay. Try this. Right, can we see that? Hide.
Let me see if I can add it. Add to stream. There it is. Yeah, right. I can see this now. Yeah.
Awesome. So at first glance, what I'm going to do is I'm just going to do a simple Google search, because what we're going to find is my Fibonacci tool is actually going to look much different to a lot of people's, and I want to explain the rationale and methodology behind why that is actually the case and why people should do the same. So at first glance, you're going to get a Fibonacci tool. If you get it on TradingView, which I'm going to show everyone how to actually get it in just a moment, it's going to look like this. So don't be alarmed if mine looks different. But what I'm going to do is
Can we just zoom in on that a little bit? Can you zoom in on your screen so we could just blow it up a bit so we can see?
He's going to let me zoom in a little bit. Yeah, so everyone's is going to look somewhat like this. Let's have a look. Do this. You're going to let me go bigger. For some reason. Here we go. There we are. Cool.
Okay, yeah, cool. So it's got different colors and like different sections.
Exactly that. So you've got your 1, you've got 0.786, 0.618, 0.5, 0.382, 0.236, and 0. Now, I'm going to get into why these levels have significance and how we use them in just a moment. It wouldn't make sense for me to just go through them just yet, because essentially what it would mean, this will be easier for me to just draw it in here. Let me just get up a chart that doesn't have anything on it. Do this. So let me get rid of everything on this chart just here. Do this. So really and truly, if I just forget all the chart movement that we've got in here, we've got two types of Fibonacci. So the way to get it upwards is you just click on here. You've got a trend-based extension. You've got a Fibonacci retracement. Now, what I'm going to do is I'm going to show you exactly what this means. So with a Fibonacci retracement, so I must say with both these tools, people get it wrong. They think you got to draw them from right to left. Okay, sorry, from right to left. But you always, no matter whether you're going up or whether you're going down, you're always drawing them from left to right. Okay, so you draw it from
always left to right. Good tip.
Always left to right. So when you're going upwards in an uptrend, you draw it from left to right, and when you're going downwards in a downtrend, you're drawing it from left to right. Okay.
Yeah. Okay, always from left to right. Okay.
Yeah. Now, if I just get rid of some of these levels on here, now what you're going to see just here is kind of a few different levels that we're looking at just here. Now, this is going to make more sense in just a moment, but essentially what we've got is got the 100%, which is from the start of the move. And let's just say, for example, if you're on a downwards trend and you start your Fibonacci from here,
yeah,
the price then goes all the way down and finds a new bottom, should we say? Yeah, here.
Yeah.
These ratios are essentially in the middle. So you've got 78.6, 61.8, 50%, 38.2, and 23%. Are essentially, if then the price reacts and it goes upwards to let's say 61.8 here, right? The reason why this level has any significance is because it's 61.8% retracement of this full entire move. Okay.
Right.
So
okay.
For example, you can see if I've got the start of the move here, I've got the end of the move here. You've got halfway here.
That makes sense. Yeah.
Then, the price in this respect has gone over 61% of this entire long move just here. Okay.
From the beginning, right? Yeah, 61%.
So that's what a retracement is. It's essentially, it means that the price has made a move. It's now retracing on that move. It doesn't matter whether the market's going upwards or down. I'm going to get into this in a moment. It's retracing after the impulsive move. So in this case, we had an impulsive move downwards, and we've retraced upwards 61% of that before potentially we look to either go downwards further and form a lower high, or break higher and change the trend structure. Now, this is where it gets a little bit more interesting, and we now understand how to use the Fibonacci. We don't understand how to use it, but we know how to dissect it and why it has any significant value, and what actual a retracement tool means. Now, what I'm going to get into now is, well, how do we utilize the retracement to then form a picture as to what can happen after the price is retraced? So let's say, for example, we've got this entire move. It's come up here. We've then got a lot of resistance here, and then the price. And let's say you sold in here, for example, as a short position. And we'll get onto this in a moment again, how this is significant in an upwards trend as well. And then say, for example, if you were trading it, and you wanted to say, right, okay, I'm gonna sell here and I'm gonna buy back here. How can you actually predict in that respect where the market is going to say, all right, let's find a new bottom and then come back up for essentially a continuation of the sequence? So what I mean by that is you would then draw the Fibonacci from here to here, and you'd work out where the retracement was going to be for potentially the next move, right?
Okay.
So, because it's all about continuing the sequence. Now, let me just continue, and this will make more sense in just a moment. So, what I'm going to do just here is, first of all, just in first glance, I'm going to show you guys in short how we use the Fibonacci retracement before I get onto the extension. Now, it's open to scrutiny how people use this, but I always personally like to use the wicks instead of the body. So what you're going to do is, in upwards trend, you're always going to use the Fibonacci depending on what the current trend is. So you can see right now, the current trend is upwards, higher, low, and I can simply articulate this by putting in a trend line just here on the weekly time frame. We've got an upwards trend. Now, what I can do then is I can then take my Fibonacci. I'm going to say, right, we're in an upwards trend. I'm going to find the start of the move, which is clearly here because we've got this big green candle, which has found the start of the move. Yeah.
Yeah.
I'm going to pull that to the most recent top here. See that?
Got you. Yeah.
And then I'm going to have a look at that. I'm going to say, right, okay, so the price is still in an upwards trend. We're coming down and we're retracing 78.6% of this entire move here. Yeah. Now, the general methodology is if we get past the 78.6%, then that shows that there's a clear lack of strength in the trend. Okay. So we might break this trend structure here. You see, if we go below 78.6. And then we might say, right, okay, we're now going to start in a downwards trend. But often what you find is the price will rebound as part of the trend off of this 78.6 or even the 61.8, and then we continue the trend, right?
Got you.
So what you can do is really and truly, and this is stuff more advanced that we'll get onto in the future, is if you're predicting things happening, we're on the week's time frame here, so it's very, very much long term. You can predict, well, if we're going to retrace as part of this trend, and I can already predict that we could potentially do that with Ethereum. If we're going to go all the way to this trend line just here, if I just make this a little bit more optimal, like this, then really and truly, it would be a good idea to start buying from here, because we've had previous levels of support that's held the price up 3 times in that respect as part of this trend line. Okay. And it's also got a level of confluence with this level just here. Now, if I were to then say, all right, well, I've now decided using the 78.6 mechanism. Let me just label this out for people so we don't forget. So let me just label this out and say, this is how we're building a trading plan, right? Because there's loads and loads of different ways we can enter the market and exit the market using Fibonacci. Right now, don't worry about the numbers. I'm just trying to give you the methodology as to how we can use these levels to enter and exit the market. But let's say, for example, we've got 78.6 here as a retracement level of this entire move just here. Now, what we're saying just here is that, well, now we've got the retracement. How do we get the extension? So the extension meaning, once the price finds support here, how high does the price react and push higher in terms of the trend? Okay. So what I'm going to do here, so I'm going to find the start of the move again. So with an extension, you're finding 3 points. You find in the bottom, you find in the top, very much like you've got with your Fibonacci retracement. Yeah.
Yeah.
Then the third point, which is the number C, is your retracement. Okay, which would be 78.6 here. Yeah.
Got you.
And in this respect, if I'm just going to add in a few little bits in here, let me see what we've got. So 272, 1.618, give me a minute, 1.382, and get rid of that, 1.216 and 1.618. We've got that in there. 1.786, 1.786. And by the way, the reason why I haven't got this set up is because I'm going to show you in a moment how we can actually do this in one tool instead of play around with it. But
okay,
just to give everyone the idea of what we're doing here. But just put this in. So
are they like Are they some sort of measurements, Elliott? Then, like when you 1 point whatever
they're measurements for extending of the trend. If I just put 1.5 in there also. 1.382, 1.236, that's what I'm looking for. Okay, 1.2, 1.236. Cool. So what you've really got now here is you've got your retracement levels, which we've clearly defined where potentially the price can go down to 2,700 on Ethereum, so 2,700. And then what we're doing is we're saying, all right, well, if we're going to extend and we're going to have an impulsive move from Ethereum, where potentially can we extend as the price? So we could extend to the 1.236, we could extend to the 4,286, or we could do a full extension of exactly 100% of the move to 4,000, which would be a new all-time high, right? Now,
okay.
This is a very clunky way to do it, and I'm going to show you the better way to do this. But the overall point is that this point here, of these rectangles here, and these levels that I've put in place here, are literally just extensions. If we were going to get a retracement, you'd then get an extension if we were going to continue the trend to some desired point. And let me show you this in an example of this, right? So we've got here Fibonacci extension, start a move. So point A, point B, point C. Now, in this respect, we didn't get a full. So if I get rid, so in this respect, we've got an extension of the trend nearly towards this kind of one region just here. Let me try the one behind because we didn't get a full extension in that respect.
Yeah.
Let's try the one behind. So start of the move. Let's try this one. Pull back. Once again, didn't get the full extension. Now, this tool, from the extension standpoint, isn't as accurate as what I'm going to show you in a moment. But the main thing is that we're pulling back and we're extending on the price. Now, what I'm going to show you just now is how we can accurately predict these things happening. So I'm going to go back to the retracement tool, and these are the custom features I'm going to tell everyone to use in just a moment.
Okay.
So anyone who's watching, what you want to do is you want to forget about the fib extension that I've just shown you, but the methodology behind what I was showing you there was literally just to show you how to use an extension. And what it is. Now, what we've got here is a retracement, a Fibonacci retracement tool. So what we're going to do is I'm going to click on here, and these are the dials that you guys want to be using. So the first one is 0. So all the standard ones that you get with the Fibonacci. So when you get your Fibonacci, created much like this, it's going to have all these standard ones in that I've got in here.
Yeah.
I'm going to want everyone to put in 0.27, 0.618, and then a -1 as well. Okay.
And these create extra blocks, yeah?
These create levels of which the price, if the price, let's say, for example, we have the start of the move here, we extend fully, we then pull back to, say, a 61.8% retracement of this entire move.
Yeah.
And let's say, for example, you've got trend lines set in place just here, and this is why I say it's always good to use with a trend line. If you were buying in here, according to the trend line, according to 61.8, and this is when we're building a trading plan, what we're doing is we're saying, I'm only going to enter the market when the market's in an uptrend, when it's going to come down to the 61.8, and the green lights of your trading plan would add up in that respect, which is a lesson for another day. But
okay,
the most successful traders have 3 or 4 criteria that might be a trend line, that might be a pullback, that might be an extension, that they would only enter and exit the market with every time. If the trade doesn't align with that, they do not take any extra risk. Okay.
Right.
So what we would then do is we'd say, all right, so my trading plan would be, number 1 is trend. And in this case, we're in an upward trend. Number 2 is pullback. So fib zone 61.8. Now, what I would do is, my personal strategy, I like to use a 78.6 because the wicks are a little bit, they play tricks. But 61.8 is what we call the golden rule. So a lot of people do use that level. Now, I personally like 0.6 because you get the better entries. But the pullback to the fib zone, and then we could say number 3 is it's an exit on, let's say for mean sakes, minus 61.8. Okay. So this is a strategy that we can use. So what we could say is right, okay, my point A is the start of the move, my point B is the top of the move, the point C what we would enter on, which would be the 61.8, and then point 3 would be I'm going to exit on the 61.8. I'm going to get out. Okay. Yeah.
Yeah.
And that would be the extension of the move. Now let's look at this. I'm going to have to do this on a smaller time frame so we can work out and see this in action. So let's look at this. So let's look at this one. So from here, from the start of the move here to the top of the move, you see in this respect, from the top of the move, we got a pullback to 38%, and then we got a retrace, an extension to 61.8. So we didn't get a pullback into the 61.8. Let's now look at other times that this happened. Let's look at this one. So in this respect, we got from, I'm going to say the start of the move, and this is all, so the start of the move wouldn't be that one, it would be this one, to potentially, let's just say here. No, it's not that. That's a bad example of what's going on.
So you're looking, basically, when you're looking at these moves, you're looking from the last kind of red candle to the green one that then takes it all the way up, what makes that the dramatic move.
Exactly. So this is an example. So we've got the start of the move, we've got the pullback. The pullback then pulled back to 78.6. And then we got an extension to 61.8 there. Yep. If you were trading that, you could have quite simply, I said there's 2 ways to look at it. I would say they're probably your main. I mean, that's quite a high trend line. So you would have got that. You could have entered the market in this respect. Potentially on this 78.6 just here. Yeah. Or 61.8 even just there, and then exited the market at 61.8 there. Extension.
Got it.
Now, the lower the time frames you get on the daily time frame here, the more opportunities arise. Okay. So if I go into this and I say, right, okay, I'm going to look at this, I'm going to say, well, here I've got a clear start to the move, got a clear pullback to 78.6, and the clear in this respect, we got, if I just make these optimal so we know what's going on.
Yeah.
We almost got, we got a clear pullback, literally optimal, perfect, and then a clear extension in this respect to the pricing was fulfilled. Yeah. So the move was fulfilled. You got a full move all the way moved upwards down from 78.6 to pull upwards, and we smashed that target. But if you were trading,
even as soon as it hits the what is it, the 60? What line was on the rules again? As soon as it hits the 61, even though that continued to go up, you still made profit because you took at the target level.
Exactly. And in this one, we'd have secured a 9% over a period of 7 days, which is more than what a lot of traders make in a month, you know.
Okay, cool. That's good.
So that's kind of how we would use it. There's a lot of different ways to use the Fibonacci. You know, there's many ways, and it all comes down to your risk management around how you use it, you know, to putting stop losses in and stuff. But that's the general methodology of how we use it. Now, if we flip it, exactly the same thing happens when it comes to downwards trends. If you're finding, instead of finding the bottom to top of the move, you're finding the top to bottom of the move. So what we're saying just here is we're saying, okay, the top to the bottom in this respect, we got a full pullback to, I mean, to be honest, we got a full pullback to 31.5, but we actually got a full pullback to 61.8 there.
Yeah.
We fulfilled the first move. Actually, if I do it like this, I mean, to be honest, we probably have to continue that sequence just there, like that. And actually now we'd be onto a new sequence if I do it like this. You can see that we've had a rejection at 61.8 here.
Yeah.
And we potentially can see Ethereum go even lower. But what we've got to be aware of is that this move here that we had here has been fully fulfilled. So you got a full pullback upwards to 38.2, which wouldn't have been an entry for us, but we still had an absolutely optimal extension on the price. Just there. See that?
Yeah.
So you see this stuff works because what we're doing is we're effectively finding points in the market that are potential turning points according to the retracements and the extensions of the price.
With those targets you said, when you said about those rules and you said whatever the initial line was called, and then once it hits the next line, which in the rule, then you go, right, you just know to sell. And once you get your head round, right, they're the rules. It doesn't matter if it goes higher than that, but you've sold, you've made your profit. So therefore you've fulfilled that, you know, increase.
Exactly. And if I look down to, and this is where you're getting into the day trading side of things, and we're looking at, you know, you only ever want to use a Fibonacci according to the current trend in that respect. So what I'm going to do is I'm on a 1 hour time frame right now. And this is where a lot of people go wrong just with taking in too much data.
Okay.
The bottom line is right now, I don't care what anyone says, we are in a downwards trending movement. Okay. The reason why I say that is because lower low, lower low, lower low. Okay. Lower high, lower high. Well, I mean, it's a slightly high high, but still pretty much not lower high.
Yeah.
So all I'm going to do is I'm going to go, just to make it a little bit easy for myself, I'm going to draw a little channel. I can even make it a regression channel if I really want to, meaning that there's a middle term as well.
How far back, when you're looking at this, Elliot, how far back from where it's trading now, Ali, how far back do you go? Like,
so there's another art to this to make sure that you fully understood what's going on with the overall structure, which I'm going to get into in a moment, which in future weeks, which is called level structure.
Right.
So what we essentially do before I mean, I'm just trading pretty much off the cuff here in this respect.
Yeah.
What you would do is you would work your way down from the daily, the monthly, the monthly, the weekly, daily, the 4 hourly to identify key areas and key zones of turning points in the market. Right. So what I would do is I would say, right, okay, on the monthly time frame, the monthly level that we're looking at this respect, that's going to be a clear level of support for the price is here. Okay.
Yeah.
So anything in between that, because we've got clear body closures here. Now, then I'd look at the weekly time frame and I'd say, right, okay, well, if we're seeing the market, and I can make these more optimal as time goes, like you know, like kind of making them like that, even making them push them up like this, to have wicks, bodies. You could even do that lower. And then once you've identified them kind of levels, you can work out where are the key turning points. So if I'm looking at this price right now, I now know that, I mean, I have to make this even better. I now know that we've got a weekly level just here, which means that it's going to be quite hard to break through. Now, if I go down to 4 hourly, you see we're still downwards trending. We've just broached the upper band of here. Now, what I'm going to look at is I'm going to say, right, okay, so if I'm going to use the Fibonacci, I'm going to go from probably the potential start of the move. Let's just use here for example, the bottom of the move. I'm going to use this one, I think. And I'm going to say,
and you pulled it. Did you pull it to the bottom of that wick?
Exactly that. Yeah, to the bottom.
Just to there, right? That's so not just for anyone that wants to double check. It's not to the actual candle of the closure. It's the bottom of the wick, and then Right. Okay.
Yeah. I prefer to use the wicks just because it counts for the volatility a little bit more. But that being said, some people like to use the bodies. I've never really liked to do that. But you see, just here we've got a live example, right? We're on the 4-hourly time frame, on the hourly time frame. What we've got is we've got the prices pulled down. We're clearing a downward trend, so we're drawing it from left to right, from the high to the low.
Yeah.
Now we've found a bottom. If I were trading this, what I'd say is right, okay, I'm gonna formulate a trading idea. I'm gonna get a short position. I'm gonna say, right, okay, I'm gonna enter on either the 61.8 or the 78.6 or somewhere in the middle. I'm gonna put my stop loss potentially above this low here, and I'm gonna put my target there. Yeah.
Right. Got ya.
And that way, here, to be honest with you, if you actually look at, and this is the interesting thing, if I look at putting these levels out according to how things are built, you can see that these two levels that we've got on the Fibonacci here for an extension. So you've got your high to the low, the pullback, which would essentially then mean that we're potentially going to see a short position because we're still in a downwards trend. This would then mean that you'd say, okay, we're going to enter a short here.
Yeah.
I've got a clear target, which is, bearing in mind, there's been clear levels in the past that's been used as resistance, which might be used as support. The second target would, and it's strange how these things align, because this 100% is pretty much exactly where these levels are here. But in this respect, because we've got outside the trend lines and stuff, I'd definitely target the 61.8. And there you have it. So what we'd have is potentially we're going to see the market come upwards to here. We might then see the market decline in that respect.
So you'd literally, as a day trader, Elliot, you'd literally just be watching now, and then as soon as it hit that target, you'd press buy, or you'd actually just set an automatic
short order.
Yeah.
But in this respect, because it's a 4-hour, it's going to be a bit more of a swing trade as this one, right? But
okay, right.
Yeah. And you've got to have a stop
4-hourly.
If news come out and we break the the overall trending structure, then we're going to be going upwards. But if I were really scalping, meaning that the price, looking at the short term stuff, really and truly right now, because we're on the 15-minute, bearing in mind I said that we were going to get upwards trending movement within that bracket to get to our short position, if you remember.
Yeah.
You see right now on the daily time frame, we're actually in an uptrend. So if I pull this from the start of the move here to the top of the move, we've got a really nice 61.8% push just here.
Yeah.
Which then might extend to from the point of here to here. And if I then break that down and I look at the overall structure, oh gosh, because the smaller moves that we're looking at becomes very, very insignificant. And if I say, for example, if I just drop down into the out for now, and I'm just gonna mark out where we've said that potentially the market might go next and get rid of this Fibonacci just for understanding of knowledge, just for clear understandings.
Yeah.
And if I then go and I say, right, okay, so we've just forecasted that potentially the market is going to go to here in the shorter term, which is this bit here, and then I redraw my channel that I just added in there. Let's put on the 1 hour. Actually, that's not. I redraw my channel that I've just added in here. Let's do this. You can see that these things kind of align,
Yeah. You can see, yeah.
The top. Oh gosh, we've got from the top of the move to the bottom of the move, and there you have it. You've got an exact perfect from the extension. You've got an exact perfect move to 78.6.
Yeah.
What we've done there is we've basically broken down. If I just make this a little bit better, it's probably not perfect at all. I don't think. Doesn't really matter.
We get the gist. Yeah.
But equally, what that means is it means that if I go to the 4-hour, we've just now, by breaking down the 15-minute, predicted that the 15-minute time frame is going to yield a move to 2,900 for Ethereum. But we've also predicted that if we're entering a short position just here at 2,900, our downside targets could look like 2,600 as part of the entire move. Is that making sense, Ollie?
Yeah, it does. It's a lot to take in. I think what's good is anyone that's watching this can go back and pause and hear, like what you say again to get it. But as soon as like you said, having a plan, number one, looking at the trend first. Is it up? Is it down? and then understanding, right, the two specific lines that you said. I can't remember the exact values of them, but you enter at that one, and then make sure you activate selling at the other one, then you can make money on it. And I think those 3 rules, as soon as you sort of said that, it makes sense on how you're kind of looking for it.
And this is the thing, right? So any successful trader has a trading plan that they follow, and they don't do anything else other than follow that, because there's a million different ways to make money in the market, like a million. And the often, like, the people that go wrong often is the people that actually just use too many strategies. You need 3 or 4 different things that all align, the stars align. So in our case, just then, it was the Fibonacci retracement, it was the trend line, it was the trend itself that we were pulling back into a certain area, and it was the extension for exiting the market. Similarly, what you could use as a strategy is you could use a trend line, you could use the Fibonacci, you could also, to give yourself a little bit further clarity and make sure your entry is even more powerful, you're entering at the right time, you could even use the RSI. As much as it's a lagging indicator, we spoke about the RSI last week. If you've got a pullback quite significantly, and it's gone up to 78.6, for example, and you also got the RSI in the oversold signal, saying that it's been sold too much, it signifies that potentially we might get a rebound to the upside. So you've stacked up what we call confluence amongst different indicators.
Yeah, no, I definitely get that. And it definitely, I think the more, people watch these videos over and over again, and go and try it out on TradingView, and like just practicing, gives them a bit of an understanding, gives them a bit of an idea. And you've got to really kind of be like passionate about it, and do it a lot, right? Because this thing's happening 24 hours daily. You've got to really be in it to kind of make some money.
And there's a major difference between people who are essentially just trying and dipping the toes in the water, and people that are actually professionally doing this kind of stuff. Within PCG, Planet Crypto, we've always just had a higher ticket program for people that are really, really, they want to learn this stuff full time. But equally, recently, we've had a lot of people who are not even been able to get to that because they can't gauge the basics,
And also, I guess it's hard because it's really time consuming, right? So if you don't have the time to do it, and you miss out on the bits where you need to be getting those positions, you're not going to be successful. So you need to, get you guys involved, because you know what you're doing, experts, and it makes sense. But like, you've got to have an interest in it to be able to look at the charts. And
I think there's ways and means to automate the process through utilizing alerts. We teach a lot of our clients the to use alerts so that you don't have to be at the computer, and you can basically, what you can do, Ollie, is you can set up alerts that when areas of your trading plan are hit and green lights are getting hit, and you're saying, right, okay, it's ready to go, you'll get a text on your phone, and it alleviates the need to be sat at the computer all day. I mean, I'm sure you'll put the links in the description below, but we've just opened the waitlist for our new low ticket stuff, and that's the kind of stuff we're trying to teach people, because a lot of the basics people just don't understand.
No, exactly. How many spots have you got open for people for that?
So we've got 100. So basically, in short, we've opened up a new subscription-based model product that allows people to gauge the basics and have a free trial on this platform. So I'm sure you'll drop that. But there's 100 spots available. I've got probably 300 or 400 people that I'm going to be having waiting for that. There will be people that missed out, but we'll then, as they give us feedback, we'll then open up more spaces. So, like I say, if you do want to be involved in that, then drop it.
Yeah, no, we'll drop it in, send it across, and we'll get it on the videos and that, so they can always check it out. It looks cool. It looks like you've had a bit of a refresh to the website. I've seen some of the promo vids. They look sweet. So, congrats on that.
Yeah, thank you very much.
No worries. Yeah, so it's future's looking good, mate.
It is. But as always, looking forward to sharing more tips on here as well. It's always good to refresh on the basics yourself as well, right?
Yeah, exactly. Every episode, always learning. So, what do you think about the market at the moment? Just kind of like downward trend. Do you think it's going to continue to go down?
I mean, to be honest, the market in itself, for me, yeah, there's no doubt. I think it's going to continue trending downward for at least the next week or so.
Yeah.
I think we're probably going to find a bottom by the end of the week and then start to, potentially start to climb upwards again. And the reason why I say that is because overall we're still in the short term uptrend, right? But the midterm and really the short term is a downwards trend. So yeah, for me, what I see at this moment in time, and this is what I've been in crypto so long now that I just appreciate this kind of stuff, and it just happens. Like we can see Bitcoin, even go to 36K, and it'll still overall be, upwards trending in the short term,
Yeah. I mean, at the moment, there's loads of, just looking at the prices on a CoinMarketCap, there seems to be a lot of bargains out there that we spoke about. Like Terra Luna's come back down a little bit. Even Matic's come back down to like, I think, £1. So, I mean, it's probably a good entry for some people who are looking to dip their toes at the moment, right? I
mean, to be honest, this is the thing, right? So the funny thing is, and I'm kind of kicking myself for not doing this either, because I've got a very, very long-term holding sack for Luna, right? Now, for me, Terra Luna is just going from strength to strength. Like, there are a lot of new people building on the platform. I've got a client at the moment who's building like a Luna-based NFT marketplace, which is quite new in that respect. A lot of them Lana and Ethereum. So their platform's growing quite substantially. Now, what you find with Luna is it seems to drop to like $50 or $60 time and time again, and then just rebound to 100. So
I know. Yeah, exactly. I look at Luna as well. I remember when it was like 30 quid, and I was like, that's not bad, but I left it.
Yeah. So my only, and this is what a lot of people get wrong with, like, I mean, I don't like it with the likes of XRP, right? So what they do is they buy it when it's moving, but I would never buy XRP above 20 cents. Because what it does continuously is it goes from 20 cents to $1, 20 cents to $1, 20 cents to $1, and you can make a lot of money just by trading that. Because
because you've been watching the history for ages, and it's even I've just noticed when I look at the prices in pounds, knowing in the top 100 coins of how low they've been to how high they are, where they are at the moment. So I already kind of know, without looking at a chart, that's a good entry point there, because I've seen it be low. And like you said, if you know a specific coin, it goes 20 cents to $1, you know your entry and what would be good at that point. And that's just because you've been following, crypto and keeping in the markets.
Exactly that. Yeah, exactly that. That's why I always say there's a lot more power in following and niching down on certain coins than there is in trying to find the next best thing continuously. As much as I don't like XRP, I've got a friend who's become a multi-millionaire just by doing that exact strategy. 20 cents to $1. He's done it 4 or 5 times. He's traded 30 grand up to 100 grand, then 100 grand up to $1 million, and then now, $1 million up to whatever. And he's done that for the last 4 or 5 years, and off we go.
So literally when it hits 20 cents, brilliant. I'll buy 30K. Oh, it's $1. Sell. Right, wait. That's mad. Yeah. It's literally mad, isn't it?
The strategy itself is very simple, but people only want to buy things when they're moving, And it's very much the same thing that I would say with Luna. My personal strategy after taking in this information, and this is what I would not recommend financially, but I'd say it's a very good thing to look at. If you can get Luna below $40 to $50,
what's that work out in UK terms, Elliott? I know everything's in dollars.
0.37. It's 1.372, I think, isn't it? The conversion. So I think it
is it like 30, so hang on. Did you say what? $50 Luna?
But it work out £39.72p.
Yeah, I wish. If I saw Luna again around the £30 mark, I'd be going in like mad. But then again, I can't see it because you can see it just getting so, getting better and better, and it's like 70, then it's like 80 quid. So I don't know. How long do you wait? Because then does it ever come back down? You just don't know.
The bottom line is, for me, like, I'm just going to set a hell load of limit orders at $50 for Luna. This is my personal strategy. If anyone wants to follow it, then off you go. It can make you a lot of money. I'm not saying that you can. I'll set some orders at $50. I'll set some orders at $30 that are a little bit larger. Yeah. So the market plummets, it'll buy a certain amount, and then at $30, it'll buy a certain amount more that'll then lower the average price. And then I'll have even more orders, which to be honest, I probably won't set. If it gets that low, I'll be set. I will literally be selling all my assets and just plunging in.
Yeah, no, you just like, this is it, bam.
Yeah, not that deep. I'm not joking, but yeah. So yeah, that's generally my strategy. Identify areas where the market bounces. $50. If it goes to $50, then bounces up, you make 100%, 200%, whatever. You set one at $30 or whatever as well for a little bit more. Maybe say for example, if you enter with $100, let's say for just easy numbers, at $50, then enter maybe with $130 at $30, and then therefore your average price, instead of being your entry point at $50, it might be $40. You know, because you're at your dollar cost averaging.
Yeah, that makes sense.
People just forget the basics. I generally work on a 3 methodology. This is the kind of stuff that we teach in the coaching. 3 entry methodology. Number 1 is your first entry. Number 2 is second entry, a little bit larger. Number 3 is the third entry, a little bit even larger. And by that point, as long as you're investing in the right thing, you just can't lose.
Yeah, and is that because maybe the first time you invest, it's at a certain point. The second, because you're doubling down, it's gone a bit lower. And then the third time, even more because it's dropped. So you're getting the best average of what you're going into, right?
I'll give you an example of what I did, right? So in 2017, 2018, I was buying a shitload of Ethereum pretty much the whole way up. Like the whole way up. But I also followed it the whole way down as well. So I was following it up, buying it all the way up to $1,500. And my average price worked out in the end at about $600 or $700 or something like that. Right?
Yeah, because you were just buying all the way up, all the way down. Yeah, makes sense.
And then what happened was the market went down, and I just kept buying until the market went down to $80 for Ethereum, and my average price ended up at like $250, $300. You know,
wow,
if that. So the main thing is that, you know, if I ever saw Ethereum dropping below $1,000, you know, which I think it will.
What, this year? You think?
Not this year. I think it probably will. That's if certain things come into play, which because of the highs and lows of crypto, you just can't rule it out.
No, exactly, yeah.
You know, the moment we go into a bear market, the market will have a desired destination for reaccumulation, which will be as low as possible. So that's what I would say is pick your bunch of good projects. You know, for me, the ones that I'm always raving about: Ethereum, Luna, AVAX, Phantom, Harmony, Solana. You know, a couple of higher risk players. You know, you can look at.
And you think those kind of plays will make you a little bit more money than, say, Bitcoin, which is a slower kind of progressive gain?
I mean, I always go down to this when it comes to portfolio management. Like, if Bitcoin dominance is high, you want to have and I'll get into Bitcoin dominance in a few weeks. You want to have a larger allocation in your portfolio to Bitcoin, i.e. 10 to 20%, right?
Yeah.
And when you see that the dominance is starting to drop, you want to decrease your exposure to Bitcoin, increase your exposure to altcoins. And this is only if the market now. It's a catch-22 because if the market's going down, Bitcoin can increase its dominance because it doesn't lose as much generally. But if the market's going up, it can increase its dominance because it goes up. You know, it might go up first and the altcoins follow. But the major thing is if you're holding Bitcoin while it's outperforming the market, you're making more Bitcoin. But essentially, if you then transfer and dilute the amount you've got in Bitcoin into altcoins that then appreciate against the value of Bitcoin and gain dominance against Bitcoin, you're essentially growing the amount of Bitcoin you've got in your portfolio by holding other assets that are appreciating against the value of Bitcoin. Okay, so that's something that we're going to tease on in a few weeks.
That's so much. That's just like you always got to be switched on. You're like, right, what's going on? Right, move it to here. Right, what's going.
So the point of what I've just said is depending on where the market cycle is, you've got to have a certain amount of percentage allocated to Bitcoin, which might be 10 to 20%, or maybe 30% when Bitcoin dominance is high. When it's low, you might have 5% of your whole portfolio allocated to Bitcoin, 50% to altcoins, and 45% in liquid cash.
So it's all about, like, from that kind of strategy, it's about moving funds around, right? Rather than just, that's the way to do it, rather than like holding. And okay. Now that's interesting. Lots to digest today in today's episode. Absolutely awesome. Loving it.
Yeah, I know. It's a culmination of 8 years in crypto, man. It's crazy.
It's crazy. Right. Okay. Awesome, mate. I'll let you crack on. Thanks once again. And as always, guys, check out the links in the description below for Planet Crypto Global. And any questions you want to ask Elliott, let us know in the comments below. hopefully next week we'll be doing something else and bringing up a new tool on the charts and doing a little bit of a market chat at the end. Seems to work pretty well. All right, mate. Well, thanks very much for your time.
Cheers, buddy.
See you in the next one. Right, here we go. So there you go, guys. Another cracking episode there with Elliott. So much to break down and digest. We learned all about the Fibonacci retracement tool and a little bit about the extension. Just a cool little series that we're working with Elliott on just how to look at a chart and what to do. And we always have a little bit of a chat about the market as well. So if you are new to crypto and you want other people, or you know other people that would like this, then by all means share our channel and stuff. Don't forget, throw me a like, get yourself, subscribe to Crypto Bible. Let us know in the comments below what you want to learn about, and turn on the notification bell icon so you never miss any of these upcoming episodes. We're always here. We're doing how-to videos. We've got loads of content in the pipeline planned. So hopefully you've subscribed. Thanks for watching. And all that's left for me to say is I'll see you on the next one.